What's good, guys? I thought I'd get into a little trade recap for y'all. We took a few trades today, so alright, it's probably good to go over them. Show my entries and exits, and give you an idea of why I took the trades, and yeah, a little bit of that stuff. So we'll get into it. First trade was, I'll put that in blue just for the sake of this. First trade was morning session, so we were trading gold. Coming into today, I was a bit skeptical of the entry. Well, there is my reasons for the trade, so we'll go on it. Maybe I can hide all drawings. So rather than this session here, it's pretty choppy as you can see. However, key indication is these are Tokyo lows here. So, oh no, shit, sorry, I didn't take this in the morning, sorry. I took this in New York session, my bad. Sorry. So as you can see, what I'm always looking, so because sorry, it's threw me off, because we're trading in New York session. I'm looking at what London session did. London session kind of chopped, but the key thing is we took out Tokyo lows. We took it out twice here, then we came back down. So I know that I probably look. This is our manipulation phase. This is our sort of reversal. So in this New York session, we're probably going to look to continue. Yeah, took out lows in London session, looking to continue the reversal in New York session. So when we continue, we have to find a 5-minute or a 50-minute liquidity sweep, which is exactly what we got here. We took out this low here just before market opened. That's perfect. That's another box tick, and then we're just looking for that 5-minute breaker structure, which we got here pretty much as soon as market opened. So then I'm on the 1 minute. I'm looking for entries. This is a pretty quick trade. I was like, right, market's open, opportunities coming here. I enter off, actually not that, I enter off this fair value gap here getting filled. Why is it glitching? Yes, I know you can see this fair value gap gets filled. We push up. My entry is here. Stop loss is down at this low here. So you can see we're pretty protected. Trade played out. We came up, sort of sat down in a bit of drawdown for a bit. I think we entered about there, so we were in drawdown, and then came up to take my one and only take profit. I think it was about a 1-to-1, maybe 1-to-2, but 1.2 risk to reward ratio. We took out London highs. I could have, to be fair, I could have held till, I don't even know, I could have held till Tokyo highs, but I just thought, get out, take the profit, about £100. So I was like, you know what, take that. But overall, really promising trades, stuck to my rules. So we had our, once again, to go over it, what did the session do previous? London session took out Tokyo lows. So I know for my bias for the day is going to be going long. So because we already see a bit of a reversal, so we manipulate, we reverse, this is our reversal. So now we're just going to look to continue. It works in 3 cycles. Manipulate, reverse, continue. So we got a manipulation reversal. So we're going to continue, and that's all we did. We didn't sweep out any liquidity, we just went straight up. And then obviously the 5-minute and 50-minute liquidity sweep is just referring to once we know we're going to continue, then to start the continue phase, we need to take out 50-minute liquidity or 5-minute liquidity, and it just so happens that we took out 15. Then we're 5-minute break structure, then we're just playing the normal strategy, letting it play out, and then that's obviously we're back to trade there. So that was the trade on gold. Next trade was, I believe, on NASDAQ, sorry. Yes, it was. Okay, so this was a bit more of a, well, it was a banger trade to start, but it was a bit more of a, I would say easy trade. I would say a bit more predictable. I sort of, you knew what was going to go on just by the way the market reacted. So let's just zoom out for a sec. London session we rallied the fuck out of. You can see here, London open zero, we just got up. Literally just got up. So I'm thinking, right, we have to come down. We've took all of these highs, low resistance, 4 hour, 4 hour, 4 hour, 4 hour, 4 hour, take out all of that. So instantly I'm thinking, let's, this is all manipulation. Look at this, massive manipulation. This is all manipulation. All of this is just manipulating until we take out a high. So my bias was clear for shorts, and I was sure of that. And that was something that I was very sure of. You can see, check the S&P, very the same, very manipulative, very going up. So what do I notice when we open market? We make a bearish SMT. So you can see we make a lower high here, and then on NASDAQ we make a high. So we push above these 4 highs, but we don't do it on S&P. So here I'm like, right, NASDAQ is what I want to trade on. and we come out, and this massive, and this since, what was it, 2 o'clock to thing, I was like, all of this run up, we can't keep on going up, we have to come down at some point, and that's exactly what we did. So let's dive deeper into how I took it. This was my 1 minute entry. I didn't even enter on the 5 minute because I was so confident that we'd go down. So we make that sort of high time frame, and this was a bit of a scuffed entry, I'm not gonna lie, it wasn't my perfect entry. Nevertheless, it played out. So we made that high time frame S&T, which is a big confidence for me to go short, right? We come up, we take out 4 liquidity on NASDAQ, as well as all of this other low resistance liquidity. This is the key liquidity level that we take out. We don't take it out on the S&P, which is why I'm trading here. So we get this initial push up. I'm like, right, let's try and find an entry. No break structure here, no break structure, no break structure. That's fine. We go back up, and then we make another S&T here. So you can see 50 high and 02 on the S&P. We make lower highs. You can see there, that's 50, and that is the 02 high there. So once again, we're making lower highs, we're making high highs. I know that NASDAQ is the lagging index, and it's the one that we want to trade for a move down. So that's all fine and good. That's a confluence that we can use there. And then from there, it's a bit confusing. Let me just... don't hear you there. Alright, so we inverse this fair value gap. So that's my first confluence. We inverse this, so as well as fill in this gap here that gets respected as well as equilibrium. We come back down. As soon as we inverse this gap, you can see we inverse the gap. We filled fair value gap, we filled equilibrium. As soon as we inverse the gap, I'm entering short. Stop losses above there. I think I was about 1% risk, maybe 0.7% risk. And then my take profit, was all the way down here. You can see I took 3 take profits. I took a take profit as soon as we hit in this gap, this 15-minute gap. Another take profit down here when we took out 15-minute liquidity down here, and then I just cut short before I hit 1 hour low as I had to go. I was going out, so that was the trade on NASDAQ. Very proud of this one, very happy with what I did. I applied to my strategy. I knew that we manipulated so high. All of this build up here, all of this just from 2 o'clock onwards, just that build up was just begging for shorts. So my bias played out well. We did hit the 1 minute low and we saw rejections, and that's fine. We kind of recovered from that loss, but it was just a massive V, and that's something that we see in the market. I knew this was going to happen. We just go up, and then when we go up this high, this fast, we have to have some relief, and that's what happened. So we kind of just erased the losses for the day, which was fine. It was a really good trade. As you can see, I'm up. I've had the account for 2 days. I'm already up 270. So it's getting off to a good start. So hopefully continue that through the week. I'll try and stream tomorrow if I can. If not, I will be trading. Hopefully we can keep this going. So thank you guys for watching. I'll see you in the next one.